Hello and welcome to a Quantum Traders video. What we're going to do in this video, and in fact the next 10 videos, is I'm going to introduce you to the concept of how you can supercharge your trading. And the first step in trading is giving yourself a statistical edge, and that edge is called the trend. So I'm going to show you exactly how you can determine which direction to trade and which direction the trend is. So you can see that this is a blank chart, and what you firstly need to do is you need to work out which way this market is moving. Now, if I said to you mark the highs and mark the lows, it'd be quite easy, but inside those highs and lows we got all these moves, these little wiggles down and these little wiggles back up. So how do you do that? Because sometimes it's not so easy to see where the swings were. So we're going to use an indicator for that, and this is an indicator that's freely available, and in fact if you want a copy, just send me a message and I'll make sure that you get it by return of post. Let's now visually look at this chart and see, did we actually capture these swings? Because what you want the indicator to do is capture pretty much most of the big swings. You're not interested in the tiny little ones, but you're interested in the big swings. And you can see that we didn't catch this swing here. We didn't catch that swing up there. So I'm just going to change the settings to actually make the indicator a little bit more sensitive, and so that it captures more of the swings. So in the settings inputs, instead of 753, I'm going to change that to 5. And I'm also make the line a little bit thicker so that you can see it better on your screens. And we'll see what this does. Well, you can see that this one is not too bad. We've caught this bottom swing. We didn't catch this swing, but that's not bad. That's kind of got most of the swings on this chart, and that's really important, because our next stage is we're going to ask ourselves a question: which way is this market going? As this is an H4 chart, it's quite good at actually acting as a short-term mechanism to find out which way the market's going, especially if you're a swing trader. So one of the things that you're looking for is lower lows, and you can see on this way down this market just made lower lows, and it made also lower highs. So as soon as this starts to make lower lows, which I believe was that one just there, you can actually see that the idea is that you get in as soon as possible when you see that first push to the downside, swing up to the upside. That's when you start looking for lower lows and lower highs, because you know that you're looking to sell this market. Now conversely, what we've got on this side is we've got completely the opposite. We've got a low here, and then we've got a high, but we don't know at this point here, are we going up? But at this point here, when we pull back, you can see that we break this top and we start making higher highs. So the assumption is that once a market has a direction that you can identify, i.e. it breaks that first swing to the upside, starts making higher highs, or breaks the first swing to the downside and starts making lower highs, you know that you are then trying to get into this market in the direction of the trend. And if you look at this market now, what you can see quite clearly is that we're in an uptrend. So for me, this market should be a buy trade, and that's it. Now the question is, where do we want to buy? I just want to make this next point absolutely crystal clear. The trigger that you have that the market is actually moving lower is when you have a high, you have a low, you have a lower high, so it doesn't take out that high there, and then it breaks that low like this. Now at that point, I don't say sell the market, although some people do advocate that's the correct way to do it. No, you need to wait for a pullback, and we're going to cover that in the next video. But get this absolutely clear in your head, that you're looking for this market to actually break lows, or if you're in an uptrend, you want to see the market break highs, as it did here. It took that high out, made a higher low, and then this next high exceeded that high. So you know at this point here that the market is going up, and you knew at this point here that the market was going down. Now, it's very important to get in at the start of a trend. Why? Because by the time you've started looking at a chart, you can see all these swings. The trend is going to be at the end, and that's the bit that will catch you out really badly. So, firstly, always do your analysis on an H4 time frame or even a daily time frame if you're a daily trader, and then you want to get in at the change of directions as soon as you possibly can. By the time we're up here, for instance, it's too late, and in the next video I'm going to explain why I think that would be too late. If you enjoy this content and would like me to make another video in the How to Trade series, then please like and subscribe, and you're always welcome to join my Discord channel. The link's in the description below.